Today's episode is brought to you by Security Financial Management.
Ooh, welcome back to Best Advice Podcast, guys. I'm your host, Rob Lovaglio, here as always with Mitchell Walk and Keith Moore. Gentlemen, what's crackalacking?
You know, he came out with that, and it's stuck, hasn't
It has. It is definitely stuck.
It's been a couple episodes, actually.
A whole lot of episodes.
Yeah.
It's worked. I think people like it.
Good. We're going to keep going with it. And if they don't, we're going to keep going with it.
Keep going with it anyway.
Just wear it out.
We like
to start each episode with a powerful practice of positive thinking. We like to call this, give me something good.
Give me something good, Rob.
Give me something good.
Radio voice, then. Yeah, wow. So my give me something good today, it was from a 5th grade teacher that always stuck with me. And I tell my friends this all the time when they're having a bad day and complaining or whatever's going wrong in their life, right? And she told me this. This was in 5th grade. I was having a bad day. I think I played bad in like a basketball game, like a 6th grade game or something. That doesn't matter. But she was like, Rob, if bad days weren't so bad, then good days wouldn't feel so good. I was
Love
like,
that.
whoa. I was like, you're right.
That's so
you're
true.
right. Yeah.
Absolutely. It's so true.
So if bad days didn't hurt so bad, then good days wouldn't feel so good.
3 weeks we've been talking about the Platt Amendment. What are you people? On dope?
Well, let's have a lot more good days.
Yeah. I like it. I like it.
With a few bad days, those good days are even better.
Yeah. Much better, much better.
Let's get to the question of the day. Today's question comes from David from Orlando. David, what you got for us?
You want to say something?
All right, guys, David says, hey, team, I really enjoy the show. Wanted to get your take on gold as an investment. Is gold a good buy in today's market? I have a family member who will only invest in gold who seems to be pleased with his gold investment. Would love to hear your thoughts.
Thank you, David. Good question. Gold's a hot topic right now. Gentlemen, will you please take this over for me?
Sure we will. Keith, clients have been talking to us a lot, and gold is a hot topic. They've had a lot of questions about gold. Should we buy it now? How much should I have in my portfolio? But there's a lot of hidden pieces to buying and selling gold and keeping gold that people don't know about. What are some of the thoughts that you have on that?
Yeah, I agree. I mean, anytime there's uncertainty in the market, gold always comes to the top. And everybody's talking about gold. Should I go into gold because of the uncertainty? I personally am not a big fan of investing in gold. There's a lot of things that support that thought process on that. One of those things is, gold doesn't have a dividend. There's no dividend. Even real estate, even though it doesn't have a dividend, real estate, you could put that in the rental pool and have some rental income. So there's some income opportunities on real estate that gold has none. And so
Zero, yeah.
Yeah.
Actually, added cost, right?
It does. It absolutely does. When I first started this industry, I worked on the trade desk, and I was very involved in the process of buying gold.
Interesting.
There's, gold is a physical asset. Mm-hmm. It's not something that, you can just purchase like a stock and it shows up on your statement. You have to do something with gold. You have to, either ship it to your residence and store it there, which is risky, or you can have a company store it for you, which there's associated costs with that. So, because there's no dividend, kind of offsetting that cost, that storage cost, insurance perhaps, you may want to have insurance on the gold just in case something.
You kind of have to have insurance on your gold, right?
Yeah.
Well, it would be smart to do that.
Yeah.
Absolutely. Yeah.
According actually to goldbroker.com, the annual storage fees for up to $20,000 worth of gold is 1.5%. So that's 1.5% every single year just to store it.
Yeah.
And, if you have some of the gold coins, according to bullion.com, they said it can cost anywhere from 7 to 10% to buy gold coins and to sell gold coins. And I've seen some others where if you're just buying regular gold, the costs are a little lower than that 7 to 10. That is pretty high, but we've heard it could be 4, 5, 6% just to buy it and then to sell it, 1.5% to store it. So there's a lot of costs in there. You've really got to see those climb in value to break even in some cases.
Yeah.
Plus there's taxes, right, Keith? On
Absolutely. There's taxes. If you're especially purchasing in a taxable account, there's capital gains that go along with that. If you're purchasing it in a retirement account, an IRA, then you're taxed at ordinary income, especially when you pull that out. So there's a lot of things that go along with purchasing gold that most people don't realize.
I love gold. The look of it, the taste of it, the smell of it, the texture.
Let's take those numbers. Like if you're at 5-7% to buy and then sell, it's had to increase at least 16%. No, I guess 20% if you're paying 1% every year, anyways.
1.5, yeah, up to 20,000 at that
so
one company.
It would need to almost be a 20% growth before you sold it from when you bought it, right? Which is a lot.
Well, especially if you want to keep up with how equities perform, for sure.
Yeah, go ahead. Talk about equities.
Yeah, no, there's a so from 1972 through 2013, if you look at how gold performed versus how stocks perform, especially during falling rate environments and increasing rate environments or rising rate environments, from 1972 to 2013. Stocks returned an average of 14.6% when rates were falling in those type of environments, where gold returned only 7.85%.
Wow!
So in the rising rate environments, stocks performed 8.47%, while gold only returned 4.86%. So really, the argument of when stocks are uncertain right now, I'm going to go into gold. It really doesn't perform any better. In fact, it performs worse than stocks over that period. So
we are now going into a falling rate environment.
I've fallen and I can't get up.
So in a falling rate environment, that spread is very substantial.
Yes.
I mean, again, according to Robert Johnson, the numbers you were giving, who is principal at the Fed Policy Investment Research Group, 14.68 were stocks in falling rate environments, and gold returned only 7.85. And that's the environment we're going into now. So that's something to think about.
But if the returns haven't been nearly what stocks have been, how did it get this, quote unquote, safe haven reputation? If it's more expensive to keep, it doesn't perform as well statistically, and it's a supply and demand kind of pricing, right? Like where does the price come from? How do we price gold?
Gold just moves up and down. It's a commodity, just like oil's a commodity. Gas is a commodity. They're all commodities based on supply and demand. And, you can physically hold it in a vault. You can physically hold it at your house. And some people just like that safety of having a gold brick in their hands and putting it in a safety deposit box or burying it in their backyard. They're comfortable with that. But over the long run, according to Professor Jeremy Siegel, this is a very interesting statistic based on inflation. It goes back to, I am saying this correctly, 1802 to 2022. So that's 200 years. The 200-year statistic, now remember, this is based only on inflation, according to Jeremy Siegel, professor at Wharton. Over that period of time, if you invested the growth of $1 in 1802, at the end of 2022, that $1 would be worth $2,170.948. So that was the growth of $1 over 200 years, adjusted for inflation. If you would have had bonds, it would be worth $1,463, and gold would only be worth $4.18. So your $1 would only be worth $4.18 of growth adjusted for inflation versus stocks at over $2,100. So you can see where stocks go over the long run. And stocks go up and down for periods of time, just like anything else. But gold actually goes on a little run, and then sometimes it goes down for a while. It moves around just like everything else does. But in the long run, the stock market has outperformed.
But I think the key term is the long-term performance.
Long-term.
And a lot of times people don't react to long-term performance; they react to short-term performance, and so that's why gold tends to be talked about more in the short term than the long term. Again, that chart, if you look at the long term, stocks are the obvious choice.
It's got like that cool factor, right? Like historic and cultural weight is pretty high because like since day one of humans, it's like gold means I'm wealthy, I'm cool, I'm, check out my watch, check out this. So I think it's got a sexy...
Kings and pirates,
yeah,
and everybody
like there's
else used to
something
have
about
gold.
yeah. But you look at the industrial industry now, like it's not much value there either. It's all silver. Like
yeah. I'll give you some stats on that as well. So according to the EPA, so for every million cell phones that are recycled, you've got 35,000 pounds of copper that you can mine from recover from that, 772 pounds of silver, but only 75 pounds of gold are in those cell phones, electronics. So, you look at it, but, for whatever reason, gold, when you talk about precious metals, gold seems to be kind of the number one precious metal everybody talks about. But really, copper and silver, like you mentioned, silver, there's way more silver, copper in electronics in that industry used than gold is.
It's just generation over generation we've been told and seen, and that gold is sexy, gold is cool, gold is wealthy. So I think it's a cool factor almost.
Captain Jack Sparrow was after the gold, not the silver.
Yeah. Right. Everybody wants the gold.
You are without doubt the worst pirate I've ever heard of. But you have heard of me.
Well,
that's
Jack
why
Sparrow.
in the Olympics, that's why it's a gold medal, not win the silver
right.
medal.
Yeah.
It's
crazy.
always gold.
Yeah.
Go after the gold. We're going for the gold.
I love that.
Obviously you've got, associated costs with any investment that you make. Gold tends to have probably a little bit higher holding costs, purchasing costs, and so forth, just because of the physical aspect of gold. You have to store it somewhere. You have to ship it when you want to sell it or buy it. And so there's associated cost with, those components. Whereas stocks, there's maybe a small fee to get in or maybe a small fee to get out, depending on, what environment you're in. But, typically those dividends that the stocks produce will completely outweigh the associated cost of getting in and getting out of those stocks. Gold, to me, is more of an emotional purchase than a purchase of a stocks or bonds. To me, you're not purchasing gold because of the growth opportunities. You're purchasing that because of wanting to hedge something because of the equity markets or because of the bond markets.
And probably safety as well. People feel safe owning gold.
Yeah, so it's an emotional purchase, whereas, stocks to me should be more of a practical, purchase. And I think, overall investing, you should go into it with a practical thinking of investing versus the fundamentals of the company. How strong is the company? How is the company sustainable for the next 5-10 years? The products that they're producing. So you've got to look at it in a practical way, and versus because you could really get stung going into investing with the emotional mindset versus a practical mindset, if that makes sense.
Absolutely.
Well, again, the real closing points on here to remember, David, is if you buy some gold coins, there could be a 7 to 10% commission up front and a 7 to 10% selling cost, so that's not very cost effective. You also have storage costs, anywhere from 1.5% to 1.1% per year, depending on the dollar amount that you have in gold. You've got taxes to think about, different taxes. Gold does not offer a dividend, and it is a commodity, so it does go up and down in value as well as stocks. Stocks, we know there's volatility. They go up, they go down. In the long run, we've seen good growth over a long period of time, but the market does move up and down, and they do also, most stocks or a lot of stocks produce dividends. So you have dividends on a large percentage of stocks, and gold does not produce any dividends. So that's the big difference. But if you'd like more information, anybody, if you'd like more information about gold, wealth, or just anything, we talk about a lot of topics on this show. Anything that you'd like to learn about, take a look on our website and look us up. We're here and happy to answer any questions on any subject that we discuss. Thank you.
All right, David. Hope that helps. Remember, folks, the secret to wealth is not what you earn, it's what you keep. Happy days, everybody.
There's gold in them dire hills.
This podcast is for entertainment and educational purposes only and is not intended as personal financial advice. Before making any financial decision, please do your own research and consult a financial advisor as needed. If you have a question for the guys, email podcast@bestadvicepodcastguys.com.